Bill Kirk, Roth MKM Managing Director, was on the call. He's got a hold on target, price target 156. It's great to have you. You know, some of the head scratching this morning was why the stock popped pre-market. Is that about the margin beat or some kind of kitchen sink element? What did you make of it?
I think you're right there. It is on the margin beat. That is a positive surprise. And at the open of the hour, Sarah touched on it really well. Expectations were pretty low. This is one of the first times we've seen full year EPS expectations going in below what they had previously guided. So people were already in the they have to guide down area. People were already in the comparable store sales are going to be weak. And so I think what you're seeing a little bit is it having already reflected some of those concerns. Over the last 3 months, Target's been down about 22% before today. The market's up, Walmart's up. So a lot of this was priced in already.
Yeah, I mean, Bill, I talked to Michael Fidelki, the CFO, about these results, and we talked a lot. Well, I asked a lot about the pride issues. They didn't share that much. They can't, obviously, but said they could not isolate that factor for June because there were a lot of other pressures like consumer discretionary weakness and inflation, making food and beverage tickets higher. And the fact that July looks better than June and August looks better than June, how much of a relief is that when you look at Target and any potential brand damage or harm as a result of the boycotts and the backlash?
So I do think you can draw a little line and try to quantify this, right? May to June was 4 percentage points worse for comparable store sales. And those things you mentioned, food and beverage inflation or discretionary spending, they didn't change that much May to June. So I think that's the majority of it. And then in July, I think you're right. You see some of those customers coming back. It's harder to boycott a retailer because they can offer convenience, right? So for some people, Target is the easiest, best place to shop. And that makes it a little bit more difficult to have the passion to go and boycott something. You know, the more extreme version is Bud Light. Bud Light doesn't offer convenience, right? There's plenty of substitute products for Bud Light. And so on a brand, boycotts can be larger than we think than on a retailer. But if you take a step back, this comparable store sales, even if it has stabilized, you're still running at about -5%. That is a level, year-over-year level, that we haven't seen since the recessionary period. The recessionary period was about -3. Their margins, although they got better year-over-year and sequentially, they're about 5% EBIT margins. Even during the recession, they were 7%. So what you have here is you have almost a recessionary performance quarter without a big change in consumer spending, without almost, to some degree, the recession. So we remain a little concerned. We think some of this comparable store sales decline and some of the boycott impact actually sticks. And so that's why we're maintaining our neutral stance.
Overall, Bill, on the consumer, coming out of retail sales yesterday, I mean, there's this growing view that the consumer is taking real wage gains and moderating inflation and turning it into spending. I've seen some numbers looking at maybe 3 to 4% consumption for the quarter. Are you that aggressive?
So I'm not quite that aggressive, but I think the point that's impacted Target the most is that the spending shifted. And this isn't a new story, but during COVID, they were the ideal retailer. They, one, were obviously open, and two, had the assortment of a lot of peers who maybe weren't allowed to be open the whole time. So they had a base level of sales that only exist in that type of environment, where obviously, even if consumer spending increases, we're not in that type of environment. So we think some of that they just naturally give back over time. And we see it even with some of the most loyal customers. I mean, they have a loyalty program called Circle, but they also have their Red Card, which is their credit card and debit card program. It offers 5% off in the store. It offers 2% gas savings. And that's declined every quarter since before COVID. It used to be 24% of sales. It's down to like now 18.